Mortgage protection. What is mortgage protection? Typically, it's a term insurance product that is sold to a younger demographic that are buying homes and want to have a policy to pay off at least the mortgage so survivors don't have to come out of pocket for it, although you can couple into that sale what we call living benefits that pay an additional benefit if they have a stroke, heart attack, cancer, or more money to replace income, okay? It was a product that was hot back between 2000 and 2010 with the prior to the Great Recession, all of the liar's loans that went out. A lot of people are buying houses. And incidentally, when you buy a house, that's public information, and that's where the mortgage protection companies get that data to then mail you the junk mail that you get to turn it into a lead, right? So that market went dead until the economy, I think, for Main Street picked back up in 15 and 16. You saw a lot more term insurance and mortgage protection sold really up to, I'd say, 2021-ish. Getting into COVID to some extent, there's still a lot of home sales, but it is really slowed down with rates being higher. So a couple of things, pros and cons about it. Now they give you a little history behind the product. Pros, you can sell it over the phone. All mortgage protection now is sold over the phone. Historically, it was sold in the client's home. You'd have to drive to different cities to sell it because it was hard to get leads. The leads are really good quality too. It is a high first-year commission product. So if you need money fast, mortgage protection is the product to sell. Incidentally, it is a one-call close product. I don't know many wage-based life insurance sales opportunities. Mortgage protection is no different. It's mostly a straight commission product, although I'm sure there's some call centers where you can make a commission, maybe not necessarily a wage, in order to offset the lead costs. And it can be sold remotely or over the phone. I think I mentioned that already. So what are the drawbacks? Again, this is like, I wouldn't say this is like the government intervention thing, but it is a market-driven product sale. So what's the market? Market is home sales, protecting the what? The mortgage. Typically, people become interested in protection at the time of sale or shortly thereafter. In other words, when I bought my house in 2019, I had like 4 or 5 leads come in saying, hey, you may qualify for a mortgage protection program, right? Because that's when the sale or when the lead generation process occurs, okay? But what we've seen, again, with this housing market really slowing down, the volume of lead availability slows down too. So it's a model that, to me, which is why I didn't go mortgage protection to begin with, is predicated on what's happening that's completely outside of my control. Like, is there a lot of houses being sold or not? I can't control that. So why sell a product where I have to be tied to something I can't control? I never liked that idea.